Howdy and good morning. Thanks once again for joining me for today's 5 with Fitz. You know, I'm looking at the screens and thinking to myself, here we go again. Jobless claims surged to 241,000 plus, more than is expected in what is being billed as the latest sign of economic trouble. Oh yeah, that may be true, but don't fall for it. You and I know better. Traders are looking at the same headline you fear and drooling because they think that it'll put pressure on Uncle Powell, as in Jay Powell, Fed Chair Jay Powell, to cut rates, which in turn makes it cheaper to borrow all the juice they need to leverage up and get to buy-in. The really aggressive ones are already getting ahead of that today, in fact. The moral of the story? Learn to live with Wall Street even if you're not on Wall Street. Your portfolio will thank you. Trust me. Here's my playbook. Number 1, can you spell Grand Slam? Because that is exactly what Microsoft turned in yesterday. If I had $1 for every naysayer who's told me it's slowing down, it's too expensive because, valuations, that it's not monetizing AI and more. Well, yeah, think about this. Azure cloud revenue growing by 33%, with 16 points of that tied directly to AI demand. Microsoft didn't get the memo about that one, huh? Management now expects Azure to grow by 34 to 35% next quarter. Not next year, not next couple years, next quarter. Well above estimates. As for the AI slowdown that so many earnest-looking, hand-wringing pennants and clickbait artists talked about beforehand, what slowdown? CapEx surged 53% to $16.75 billion as Microsoft races to scale its AI infrastructure, with CEO Satya Nadella confirming plans to spend, get this, $80 billion in fiscal 2025 building out AI-ready data centers. The only fear I have is that I don't own enough shares. Now, by the way, I want you to look at yesterday's number 3 for more context and why I make that statement. There are really only 5 to 10 companies that matter when it comes to AI and your money. And by that, I mean they are quite literally worth your money and the risk you take as a shareholder. Hopefully, you've got this covered and you're thinking along the same lines, which is why you've also hopefully I have rented lips today, that you've also got a narrowly defined short list of your own. Now, if not, I would love to toss my hat in the ring with a shameless, selfless promotion for One Bar Ahead, our paid research magazine, which has helped smart investors in 35 plus countries chart a path forward for decades. That ends a promotion. Number 2 today. What's on my list? The fabulous Kelly Evans and Dominic Chu invited me back to CNBC yesterday for a wide-ranging chat about current market conditions and what's on my list. Bottom line is very simple. Watch the video. I think you're going to enjoy it. But bottom line is buy the best, ignore the rest. Has never looked so good. Number 3, China is not behind in the AI race. NVIDIA CEO Jensen Huang just delivered a wake-up call. Quote, quote, China is not behind, end quote, in the AI race. And in some areas, they may be closer than the U.S. wants to admit. Here's the thing. You've heard me say that for years. But I'm not a leather jacket wearing, card carrying, cool member of the CEO club. But that's beside the point. Speaking at a tech event, Uncle Jensen called Huawei one of the most formidable technology companies in the world and reminded everyone that this is an infinite race, long-term, relentless, and far from over. Comments I agree with, by the way. This isn't just about earnings or chip shipments anymore in my mind. This is a global power play, and it is winner take all. The other thing to think about is just like Musk understands BYD, Huang clearly understands Huawei. Huawei, by the way, will also likely make a run at Apple, something Tim Cook is undoubtedly aware of as well. Number 4, I am itching to short Meta. El Zucco and company turned in a top-line beat but didn't pass muster bottom line as expenses continued to rise while the company tries to keep up with everybody else. Now, I'm not sure that's going to be possible, and I am itching to short this stock. Zuck led on that an EU decision could result in a worse user experience there, which is executive speak for he can't figure out how to turn a buck at users' expenses easily. I am also impressed, but remain concerned that the Reality Labs hardware division is such a train wreck. That was a big part of the bait and switch from Facebook to Meta in the first place, if you recall. And finally, the company expects a drop in online advertising as a portion of Asian-based, read mainly Chinese, spending is shunted to other markets. Putskis could be interesting. And number 5, finally, this one made the rounds, tore up the tape yesterday. Tesla has denied that Musk is out. Elon's not going anywhere, at least according to the company. Now, rumors ripped through the tape yesterday suggesting that the board was quietly shopping for a new CEO. The company, of course, hit back fast, denying the claim entirely. I hope that's not the case, frankly. Say what you will about Musk, but without him, Tesla's valuation math doesn't work. He's not just the CEO, he is the story, the sizzle, and the secret sauce all in one. Keith's investing tip for this thing is pretty critical. It's important to understand. You never want to confuse leadership risk with company risk unless they're the same person, which is the case with Tesla. So a trade idea for you, if you think the Musk premium holds like I do, any weakness is a buying opportunity if you have a 3 to 5 year horizon. If not, or you're a trader, puts are cheap enough that it seems to me there could be one hell of a hedge in the $160 to $170 share level to carry you through summer. Today's bottom line, flying by the seat of your pants doesn't count. Set goals, have a plan, execute and adjust, and then do it again every single day. You got this, I promise, and I will be here anytime you need me. As always, let's make it a great day, and I will see you tomorrow. Thanks for watching.